Welcome to the Dough Show. It's the Dough Show. You take 1 week off. Look what happens. Anyways, welcome to the Dough Show. Happy Tuesday. Hope you're having a good day so far. This is a show where we basically just cover anything that helps you with your dough. It's going to get better. We have a lot of great things actually planned for this show. But we cover all kinds of different things, whether it's retirement investing, long-term investing, personal finance, debt, credit, things like that. We're going to cover it. Today we're going to cover something actually pretty interesting. We are financial advisors at jazzWealth. We manage long-term retirement accounts for you, long-term investment accounts, and we are so grateful for those of you that have actually given us a shot and found the value in Jazz. And today I'm going to expand on sort of the industry, pull back the curtains, if you will. And if you find something you like and I've helped you in some way, hit subscribe. If you're interested in joining us here at Jazz, you know where to find us, jazzwealth. It's on the sweater, jazzwealth.com. So, and there you go. Okay, here's the thing. I get a lot of questions, and a lot of times on the phone calls that people schedule with me on our website, I learn a lot. And I learn what's missing, what's not quite being explained clearly enough as an industry, not by me, but as a whole, by the industry, what's not being explained clearly enough. So, today we're going to cover 4 things without picking on the financial industry. We're going to cover 4 things that advisors or in the financial space just don't want to tell you, right? And for what reason, and then we'll explain how things go. Now, I get the question a lot, what are my choices, Dustin? I'm speaking to you, I see the videos you do, I understand your service, but what if I decide to use something different? What are my alternatives? So I'm going to break that down real quick, and then we'll discuss how the advice actually falls into place with these different choices. So here's what you got. You've got, to start, your JP Morgans, Franklin Templetons, Raymond James, T. Rowe Price, things like that, those really big companies that really want to work with the wealthy individual. They will have minimum starting balances of $500,000 or more. Fisher Investments is one that advertises a lot, and they actually say on their commercials, if you have $500,000 or more to invest, give us a call, right? If you have less, they don't want to talk to you. So that's that. Now, for that, if you are a very wealthy person, chances are your finances are pretty complicated. Your investments are probably pretty complicated, and so you would be doing right by using one of those big companies. I used to work sort of for one of those big companies, and so I know how they approach giving financial advice and investing for those that meet that criteria. And it's very, very much worth it. I would not say that it's a bad service at all. The problem is, most of us aren't quite there yet. Right? When you're younger and you're just getting started, you might need that level of help to get you to a point where these guys will be calling on you. So I always notice a little disconnect there. Okay, so if you don't fit in that criteria, or you don't like the suit and tie thing, you're intimidated by the big buildings, well, next up, you've got jazzWealth and the local guy in your neighborhood. So a lot of times when people are talking to me and they say, okay, I'm interested in you, jazzWealth, but I'd like to do some more research. I'd like to consider other options. What should I do? My answer is usually go find the local guy. Go find someone who may have Schwab as a brand that they offer, but they're independent. You'll see it right on their door in their hometown. It'll say whatever their name is, and then underneath it, it will say Independent Financial Advisor. And basically that just means that they're free to do anything that is really best for you. It doesn't mean they're fiduciary, but it means that they're free to make decisions on their own. So jazzWealth, we kind of set out to be this group here with the advice and help people with the things that really they need to get them to a higher net worth, but we don't have that high requirement. We said we'll just help everybody until we just can't do it anymore, and then we'll just cut it off. We'll just stop and won't take any new customers. So that's that. And if you're doing a little research, you'd have the local guy. Now, in these top 2 categories, you are going to get all the possible financial advice you could ever want. If you just want to talk about paying off a credit card, all of these people will help you because you have lots of money with them, or that's just a service they offer, or it's a guy that you know from your hometown meetings and networking or whatever it is. You're also going to get help with the investment advice, right? From what should I do? Should I be more aggressive? How much money should I put in? All of these guys are going to help you out. Full service advice is basically the way to look at it. Next, you've got companies like Wealthfront and the Robo advisors. So this is very popular these days. Basically, people say, I don't know how to invest, but I'll trust that the computer will make the decision for me. They call them Robo advisors in my industry. And so they basically sign up to open an account at a company like Wealthfront or Betterment, and they'll say, answer a few questions, and then the computer goes to work and starts investing for them. So with that, you lose the advice, right? Because it's a Robo service. They hope you don't call. They charge you a lot less because they don't want to have communication with you. Not that they're bad people, it's just they can't afford to constantly help you with other advice, so they don't offer that as a service, but great services. I won't say anything bad about them. And so that's like the next level down. So these would be for people that are like, I don't think I need advice, my finances aren't very complicated, I don't see them getting more complicated, I just don't want to talk about the investments, I kind of just want to do it and know that I'm getting something efficient done for me at the lowest possible cost, by the way. And so that would be this group right here. Then the next group down at the bottom, those are you that are going to do it yourself. You're a DIY investor. You'll choose a brokerage firm, Fidelity, TD Ameritrade, E-Trade, whatever, and you will actually open the account. You will choose the investments. You will manage the investments, and basically you're taking control. And so when you do that, you lose all advice, or not lose, you just don't get advice, right? Because you're not working with those people. There will be articles and education. TD, by the way, has a great educational division, right? Real good stuff there, videos and articles you can read. So you can get advice that way, but you'll never get any specific advice. There may even be some calculators on there to help you determine different numbers along the way. Okay, but no real advice there. So what we did here at jazzWealth is I said, okay, what if we could incorporate all of this, right, into jazzWealth? We could be the local guy. You might not see us. Well, you will soon because we're going to have our studio built out. You'll be able to come by and actually say hi if you're in town. But you always see me. I'm here every day talking to you, so it's kind of like we're local. I wanted to offer some of the Robo side of things, meaning if a customer wanted to have the ability to make deposits and have them invested automatically, they could. And so we've got that through Folio. It took us 2 years to get that set up with Folio and to actually get them on the same page. So we have that. And then what I wanted to do was have the DIY and brokerage side of things sort of in it as well. Meaning if a customer says, I see all the funds you have, Dustin, but I'm a die-hard Verizon fan. I'm a die-hard real estate investment trust fan. I'm going to need a little bit of that too. Well, then you're free to make that decision. We can actually talk about it, see if it's a good fit for you, and then make it happen. I won't do it automatically, but we'll do it together, okay? So that's us. Now, the reason I covered all of that is because what we're going to cover now, and I'll try to go through it pretty briefly. If you have a question, just feel free to let me know. Hey, a drumstick fell. Let me know if you have a question, but we're going to walk through this here. 4 things that advisors just really don't want to tell you, okay? And I'm going to tell you, and we'll see what happens. So number 1 is dollar cost averaging weekly is the best way to go. It's not an opinion. It's not some selfish reason that I tell people to do that here at Jazz. It is because it is statistically the best way for you to invest. Not only that, psychologically it feels pretty good as well. Instead of investing $200 a month, you do $50 a week. It's less pain on your checking account. It also turns out to be statistically better in the long run, not just because there's extra weeks in there, but because the markets fluctuate. The markets are going up and down, and especially down right now. And so as those things are happening, if you're investing once a month, right? Look at where you're possibly investing. You're not taking advantage of all the little dips. Now, this is not market timing. This is contribution timing. So if you're investing every week, look at the difference, right? Now you've got different spots, better average costs in the long run. The market has been near lows, pushing a little bit lower and lower here for over a month. And so you're getting the opportunity to add a little bit more at lower prices. In anything else in the real world, you want to add at lower prices. Now, financial advisors typically either they don't know this statistic. I believe I am actually the only one that has ever brought it up and studied it and gone back to figure this out. I haven't seen it anywhere. But the reason why they won't tell you to do smaller weekly deposits and instead they will tell you to do large sums and we want you to invest and max out your accounts as soon as possible, they use the argument the time value of money. And it's fairly true, meaning the longer time you have money working for you, the better off you are. The sneaky, selfish reason is assets under management. They call it AUM, right? Advisors want as much AUM as possible. jazzWealth, to be perfectly honest with you, has about $10 million AUM, meaning assets that we manage. We're hoping to actually update that here soon with the SEC. You are required to update it once a year, and so that window is about to open for us, so we'll update that. Now, I will tell you that we have about $10 million dollars under management, so you can realize we're a small company. We are a speck of space dust in the universe relative to your bigger companies, right? So, but now you know, right? So it's a transparency thing. Advisors as a whole, they want as much assets under management as possible. It's how they get bonuses. It's how they get more incentives, more advantages. I can promise you, once we update our SEC records, more third-party companies start calling and have an interest because we're going up the scale. And so, of course, we hope to continue that. But that's why no other bigger advisor is going to tell you, just go slow, just ease in, because that doesn't get them to their goals faster. And to be selfish and to be perfectly honest with you, we all have goals of getting as much money under management as possible. So maybe it's a bad thing, but that's all the business cares about. When you go talk to other advisors, that's the question they ask. They don't ask like, what type of customers do you have? Do you like your customers? How do you market? How do you do advertising? No, they go, how much are you managing? That's the first question that comes out. And that's sad because, you know, really, that's not the most important thing, but that's what it is. Okay, number 2. Advisors won't tell you that some of you can actually just do this yourself, right? And it's sort of weird for me to say that because I should be telling you that you should be scared about investing and you should let me do it and come, you know, work with jazzWealth. But the truth is, there are some of you that like to do this. You understand how to do it, or you want to learn how to do it. You have the time to do it. You have the passion to do it. And if that's the case, don't call me. Don't call anybody else. Go do it yourself, because there's a certain pride in doing that. It's like changing your brakes on an old car. Sure, you could pay somebody to do it, but if you have the interest in getting down there and doing it, there's a certain breed of person that has to do that. And I respect that. I will never try to talk somebody out of a DIY approach to come use us. You would have to say, Dustin, I'm giving up. I don't want to do it anymore. I need more financial advice. I got married, had a baby, had a divorce all in the same year, and I lost my 401k because I cashed it out early, and I bought a house, but I had to give the house back to the bank, and I also have $40,000 in credit card debt. That would be someone I would say, okay, let's move the accounts over here. That's fair. We'll get started, and then, of course, we'll get your life straight. Okay, but so advisors don't want to tell you that, and you know, that makes sense, right? So jazzWealth as a company, we exist for people that don't want to do this. They don't want to invest. They don't understand how to do it. They don't have the time to do it. They maybe tried to do it, realized it wasn't for them. That's what we're here for. We are not here for everybody, and I will never say that. So that's number 2, what advisors will say. Actually, I have some customers that use us only for the Roth. Right? They just fill up their Roth IRA, but they have their other accounts. They do all kinds of other investing. They basically use us just for the classes and the free advice that comes with the Roth IRA. So I'm totally cool with that, right? It's fine with me. We'll make a few dollars. We'll help you with every other account that you have, even if you only give us just that one. So no hard feelings there. But if you're a DIY investor, stay the course, man. Learn as much as possible. I'd encourage you to watch the closing beat as well. I'm always teaching something new there. Okay, the third thing, you know you can invest in an index fund for free. I'm sorry, you can invest in an index for free. You don't need to pay it. So some of you say, God, I'd sure like to have the financial advice, but there's not a chance in hell I'm going to pay you or anybody else, Dustin. It's just not going to happen. I want to figure this out myself. I read a book that says I should invest in the index, whatever index the book suggested. And that's fair, right? That's a way to go about this as well. But my argument is always, number 1, what index was it? If they tell you to invest in an index or an index fund, which one was it? Because the one that every book tells you to invest in or every advisor guru tells you to invest in is not the best one. So the S&P 500 is not the best index to invest in if you want market level or better than market level investments. The NASDAQ 100 is not the best index to invest in. The Russell 2000 is not the best one to invest in. The Dow 30 is certainly not the most interesting or the best to invest in. In fact, I haven't posted it yet. In 4 weeks, I'm actually going to go through a class with our customers, and I'm going to go through every index and every sector in the market and not only show you which one is the best to invest in, we'll rank them all, but I'm also going to show you the volatility that you would expect to do that. So what I'm going to show you is if you want to beat the market, here is how this actually happens. However, it may be very volatile. So how can you be in line or beat the market with the least amount of fluctuation as possible? We're going to cover all that. It's a very geeky class, so if you're one of our customers, be ready for that. Anyway, side topic. Number 3, you can invest in an index for free. So number 1, I always say, which index are you choosing and why? Don't just read a book and invest in an index fund because somebody told you. Get the most out of it. Go question that and say, great, is it the S&P 500? No, right? They're going to say yes, but it's not. Is it the Russell? No, right? They're not going to even mention that one. Go milk that for as much as you can. Then just go buy the index yourself. You don't even have to buy an index fund. You could just buy right into it. I don't know why nobody talks about that. Okay, however, if you're not into that, it's too geeky for you, and you still say, I want the least possible cost to invest. I don't care if that's the best for me. I just read this and this is what I want to do. Go to Fidelity. And I'm never going to plug Fidelity, by the way. This is a once-in-a-lifetime thing. I had 2 cups of coffee today, so that's probably why I'm spilling the beans here. Go to Fidelity. Fidelity just launched a 100% free index fund. Now, before you all go do that, do you think anything's actually free? Seriously, do you think it's free? The commercials will tell you 100% free, and it is. There's no maintenance fee, there's no trade commissions, there's nothing, no expense ratios or nothing. It is free, their new index fund. You know why they're doing that? Because they're going to get money off you in the back end, right? Do you go get a haircut because it says it's free? Where's there a free haircut? If you go to a restaurant and they're like, guys, the steak tonight is free. I encourage you to have the steak. Are you going to eat that steak? Nobody's eating that steak. If someone tells you food is free, you run, you leave the restaurant. Anyways, that's available to you. So I point that out for the people that say, I'm interested in investing. I want to do this myself. I don't care about other opportunities that may fit my goal. I just want to invest in an index. Whatever your goal is, you just think that's good enough for you. I'm not going to argue. Just know you can do it for free. You don't have to pay. So obviously no advisor is going to tell you, you don't need me, go invest for free. But the truth is, with a little bit of research, you can just go do it for free if that fits what you're looking for, okay? Now, number 4, the final one, the dollar amount that you save doesn't matter. What? What's this all about? So how much you save or whatever you think in your head you need to save doesn't matter at all. Most people say, Dustin, I like to save $1 million for retirement. Some people are smart and they go, $1 million is not going to be worth $1 million 30 years from now, so I want $2 million. Okay, that number doesn't matter. And to prove it, there is actually legislation going through both the House and the Senate right now, I believe it passed the House, to force 401k companies to quit putting the number on there. The calculator that says if you invest this much over the next 25 years, you'll have $2,480,000. That number doesn't matter, right? Advisors won't tell you to focus elsewhere because they want you focused on that number. You've seen the commercials. They try to scare you and say, you need $5 million to retire. Well, how do they know? How do they know how much you're going to spend? What if you spend $1 million a year in retirement? You need a lot more than $5 million, right? What if you only spend $20,000 a year in retirement? Then $5 million's killer. You don't need that much. They won't tell you that because it boils back down to assets under management. They want as much money under the umbrella as possible. Well, the reality is the dollar amount doesn't matter. It's the income, right? That's what matters. How much money will you spend in retirement? If you say I'm only going to spend $20,000 in retirement because I have 7 rental properties that are all paid off or whatever, they will be paid off, then you don't need $5 million. However, an advisor is going to say, well, you never know. Them houses could get blown over by a Wizard of Oz type tornado. You know, the people that live there could burn them down, so you better have this backup account with the $5 million in it. That's their job. They're supposed to prepare for the worst. I will always prepare for the worst for my customers. However, $5 million in that respect is ridiculous. It comes down to assets under management. You want to know how much you're going to spend in retirement, or at least have a few different ideas. Maybe you say, I'd like to try $50,000. I'd like to try $80,000. I've done a lot of videos on it that actually go through the process so that you can understand how that works. I just thought of a bonus one, actually. So, number 1, weekly dollar cost averaging is the best way to go. Fact, end of story. Number two, some of you can do this yourself. If you think you can or you have an interest, go ahead, have a blast. Leave me a comment. Let me know how you're doing. Send me an email and ask for help. I can't give you specific advice, but I can help you. Number three, you can invest in an index for free. It's not for everybody. I would do more research. I did a video on which is the best index to invest in because, it's not the S&P 500 for the goals that most of you have. And number four, it's not about the dollar amount that you save, it's about the income. The bonus one that I just thought of was, you know how you save for your kids? And I go over the retirement plan. You do your 401k up to the match, right? Then you move on to the Roth IRA if you qualify. Then you figure out the investments that are appropriate inside of them. You get your dough straight. Once you get your dough straight, you can save for your kids. You cannot save for your kids until those four things have been met. Well, when you get to the point where you're saving for your kids, a Coverdell account is more than likely good enough, right? It's probably going to be just fine. I personally like the custodial accounts and have explained in the past why. But if I'm perfectly honest with you, I'm not going to make a video on the Coverdell accounts. Why would I not make a video on the Coverdell accounts if that's pretty much good enough for most people to save for retirement? Why don't you see financial advisors talking about Coverdell ESA accounts? Why are they always talking about 529s and custodial accounts? Because most advisors can't do the Coverdell accounts, and even if they could, there's a limit. The limit on the Coverdell account, I think it's $2,000 for the remainder of this year. That's nothing. They want you to put thousands of dollars in. They don't want you to put just $2,000. They don't want those people, and so they don't talk about that. But in reality, that's a great little vehicle, right? Now, personally, I'm a custodial account person because, in my opinion, every kid is not going to go to college. Why are we tying up money for a college education when we're not sure if the kid's going to go or even need to go to college? I like flexibility. So for me, I'll always put flexibility ahead of tax advantage. Flexibility, tax advantage, then the goal. And so for me, I will always talk about the custodial account. So it's sort of 50-50. Not going to talk about the custodial account because I don't even offer them, right? So it's selfish. But I do believe I'm not going to talk about the Coverdell accounts, but the custodial accounts are what I personally want to work with. That's what I believe in. I'll always go with that flexibility. It's the same reason I'm so focused on the Roth for all of you that qualify. Flexibility, tax advantage, investments, okay? So think of it that way and you'll be just fine. So, hey, there's a little bit of the truth serum for you. I hope it helps. I didn't want to badmouth anybody, so I tried to include all the different companies in there and some of the things that they offer. So if it works that you want to work with us at jazzWealth, great. I'll still be here tomorrow. I'm going to do our video later. I will continue to help. But if it's something that I mentioned was a better fit for you and you're just not sure, give them a call, right? Do a little research and then call me and say, Dustin, I went to JP Morgan. Turns out they will accept me. What can you do? Like, how are you any better? It's going to be a tough argument, but I'll give it a shot. You know what I mean? So I'm here for you. All right, if you have any questions, I'm happy to answer. You have a portfolio with a negative correlation. You control my Roth and kid stuff. I'm looking for about 2 weeks. You have a portfolio with a negative correlation. I'd be interested to know what that costs. Are we using leveraged products? Because if that's the case, I hope it's a very, very short-term portfolio. Let's talk about that one. Caleb, how many customers do you have? As a company, we just went over 1,000. So if that helps. Like I said, there's no question I won't answer because the guy or the company that's going to manage your money should not be a closed book. They should be able to tell you everything. I have a daughter that's 18 years old. Some of you have done that math. I've done a video on that and even that personal stuff. I'll even answer that for you as well. I'm actually building out a whole studio, warehousey office sort of thing. I posted a video about the air condition yesterday just so people can come by and actually open the door and go, you in there? Okay. All right, the guy on YouTube's for real. So I'll answer any question. But yeah, just over 1,000, not me personally, so it's not like I'm sitting here answering 1,000 customers' emails a day, but as a company, yeah. Cool. I'm glad you like it. Best performing index fund in the last 5 years. I don't know. An index fund is sort of a loosely based term nowadays. It could be an index mutual fund or an index ETF. I would venture to guess that some of the index ETFs would do better than the index mutual funds because they're just like a tick more expensive the mutual funds are. Not much at all. Very, very, very tiny difference. But which one has done the best? They're going to be very, very close, but I don't know, actually. And your 5-year period, I think is too close. If you're trying to compare, because really it's just boiling down to costs, right, and efficiency. How efficient are they in keeping up with the index? So, yeah, maybe quick Google search or something to check that one out. How do you like your coffee? And there's no such thing as a free lunch. That's true. No such thing as a free lunch. I truly believe that. I have a friend that always invites me to lunch, and it's never just to catch up. And you'd think I'd learned by now, but I've got a lot of lunches out of it, but I think it's cost me more in the long run. I like my coffee. We actually just got the new machine that spits out the foam and everything. I don't know what it all means, but on the top I press the cappuccino button, and then I press shot, and it does the thing. So that's how I like it. Yeah, Betterment. Yeah. Cool. VOO or VTI? Why's it got to be one of those two? Nick? Why's it got to be just one of those two? Oh, you're saying those are as close to free. Yeah. If you want to use an ETF, you don't want to do the research, there are those. I kind of like the SPY myself if you're focused in on the S&P 500. Not because it's best for everybody, because of the options. Very liquid options market. And so I would lean that way. No leverage, but so inverse in the short term. Yeah, but still, those inverse funds are leveraged. That's what I mean by that. So an inverse fund is going to cost you. There's a daily drag on that. I'd love to do a video on that. That would be a super duper geeky video, but it's probably going really well for you right now. But I would say if things flatten out, try not to hang on to that too long. Happy to talk to you about that. What's your retirement accounts worth? Like as a company, what is it all worth as a whole? I'm not sure the question there. What a good time for me to set up call. Yeah, that sounds good. I'm happy. I'll be here. Can you manage your wife's 403b teacher? So we help with all of our, like if our customers have like a Roth or an individual account, we're already doing something for you. We're happy to help with any of your family's accounts. So if you have like a 401k, your spouse has a 403b, I always tell all of our customers, send me a statement. I'll do all the homework. Believe it or not, I sort of like that's my favorite part of this job is digging through your other investments and just trying to break it, to try to find the most efficient way to do it. People are always sort of shocked when I respond back with fractions of contributions to the different funds because I want to figure out the most efficient way to do it. Would it be wise to just invest in what Warren Buffett invests in? I believe he's actually quoted saying, don't invest in what I invest in. What most people don't realize is Warren Buffett is one of the largest derivatives traders on the planet. Not him personally, his team. And so a lot of what happens with him has to do with derivatives. And it needs to because he's sort of focused in on a handful of names there. So that never makes the news, but it does make all the filings. If you really want to geek out and read through some of those filings, it's pretty intense, man. The guy's a genius. His company's a genius. I'll give him there's nothing, you can't take it away from them, that. You offering an hourly rate for advice yet? No. Technically, I don't think we can. We're registered investment advisors. We are not certified financial planners. There's a bit of a gray area there, but we just got registered with the SEC, so I'm trying to be nice. So no, not at the moment. Offer hourly advice as an individual. I think that's what they mean as far as an individual goes. Okay, well that's it. So we've got the closing beat coming up later today. We'll cover the stock market, of course. If I helped you in some way, maybe guided you away from jazz, but you're going to find the ultimate place that's best for you, and that makes me happy. Make me happy by hitting the subscribe button, and I'll keep cranking these things out. You enjoy the rest of your day. If you're interested in the stock market, we'll be back at 5 o'clock Eastern Time to do the closing beat, and lots to talk about. Talk to you then.
Why should you choose jazzWealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.